here on the US oil, we have a pretty interesting scenario here that happened yesterday. So during the course of the live session yesterday, we identified that since the beginning of the week, that price action has been caught within this channel at the $80 area and the $79 area. So we were able to identify that channel, figure it out. So we had the resistance level right here. So we saw selling pressure right around this area at the $80 level, and then we saw buying pressure around this area at the $79 mark. And one thing I stated here yesterday was that we identified a reversal pattern around this area where the $79.30 area was serving as a neckline of that structure. And at the beginning of the week, we saw our price started with a bearish momentum, coming back into the neckline of the reversal pattern that we identified here on the 15 minutes time frame, followed by multiple rejection of this level. And I told you yesterday that we should take advantage of that move, which we did. And remember, I told you to move your stop loss accordingly to lock your position at break even, just in case price might likely drop further to the downside. And this is exactly what happened yesterday. So as at yesterday, we had a conclusion here that we are looking out for either a breakout of the channel to the upside or a breakdown to the downside to incite either a bearish or a bullish momentum from this juncture in the market. And this is exactly what happened yesterday. We had a situation where price broke down the $79 level, did some samples of selling pressure around that area on our lower time frame, and we joined the decline to the downside. And if you look at this pretty well, you can see that our take profit target, which was located at around the $76 level, was quite precise, as we saw how price came exactly into that zone, which was an extension of the previous impulse leg here when we used our Fibonacci extension tool, when we aimed at an area between the 127.2 and the 1414 area. So it was the exact area that our price came into for the take profit target, which dovetailed to about how many pips was that? Over 360 pips on that one. So for those who took advantage of this move yesterday, kudos to you. Congratulations for being on standby to take advantage of that move. Now immediately price came into the $76 area, we saw a multiple rejection of this level by buyers, but I actually missed this move. I didn't take it anyways. And if you are taking that move too as well, kudos to you for enjoying that, as price came back again into the resistant level of the channel that we identified here since the beginning of the week. So we are at a very critical point in the market right now, as price has continued to trade right around that $80 level in the last 15 to 20 hours now, as we can see here. And one thing I noticed here this morning was that we saw a breakout of this channel around here. Before I go into that details of what our expectations are for today, let's quickly have an holistic view of what is really going on the higher time frame, after which we are going to be coming back here to make a decision for today. So let's dive into the daily time frame and let's see what is really happening there, after which we'll be coming back here to make a decision for today. So right on the daily time frame, we observed well, the most important structure here is the area between the month of September and now. And what we have here, we have a couple of key levels that we shall be using to guide our trading activity. So let me delete this one, as it's no longer relevant at this point. Okay, I think we should still hold on to that. So we have the $85 level, which has been a major determinant of price action in the last couple of months. And if we go as far back as the month of August, we saw how that level was holding buying pressure at one point in time before buying pressure was negated by the sellers around here in the month of September, which led to a final breakdown of the $85 level. And throughout the month of September, price has continued to trade right below that area. So when we fast forward into the month of October, which we saw this engulfing this impulsive move that took price to the upside, which is a reflection of the OPEC Plus decision a couple of months ago. And then we saw another retest of that trend line with an attempt by buyers to push product price further to the upside, but this was met with another resistance from the sellers from that same level at around the $93.50 level. And what this simply tells us is that the sellers are still very strong at this point in the market, and we saw how it pushed price right back into the $85 level. We saw multiple attempts by the buyers to push price to the upside, but this failed as we saw how sellers took advantage of this and pushed price further to the downside. So since last week trading session, I think since on Thursday last week, we have seen price continue to trade right below the $85 level. So going into the new week, what was our expectation? Well, we identified that price is still around a very strong demand zone, which has been holding buying pressure since the month of September. We saw buying pressure here, then we saw another one here in the month of October, and right now in the month of November, now we saw that price is right back within that zone. And if we look at what happened here on Friday last week and what happened here yesterday, we can see that the candle that closed on both occasion has bullish tendency at this point. Look at these candles here. They close in the form of a hammer candle, which is a representation of possible trace of bullish momentum around this area, which also shares a confluence with a strong demand zone. So we were of the opinion that we might be seeing a situation where price might climb up one more time to do a retest of either the $85 level or probably the bullish trend line here before we start seeing selling pressure on a lower time frame to incite a further trend continuation to the downside. And you know that when we witness a breakdown of a structure like this, like a breakdown of a key level like this, we expect that at one point in time price might likely come back to do a retest of that structure to incite a further trend continuation to the downside. So this is one of the scenarios we are looking forward to this week. So the possibility of price coming back into the structure before the downtrend scenario happen, that is one scenario we are looking forward to. And the other scenario we might be looking forward to this week is an outright breakdown of that demand zone in such a way that price takes out all the buy pressure around this area to give us a bearish signal, after which a retest of structure should be giving us further confirmation to join that trend continuation to the downside. So these are the two scenarios we are looking forward to. So on both occasions, we still have a possible bearish long-term momentum here, but we are not sure how price is going to be relating to the demand zone that we just identified around here. Is price going to move up first to do a retest of structure before the downtrend continues, or are we going to be seeing a situation where a trend continuation pattern is evolved into before the breakdown retest on lower time frame might send price crashing further to the downside? So this is what we are going to be looking at on the lower time frame. So as a result of this, we will be scaling down to the lower time frame so that we can understand what is really going on since the beginning of the week, so that we can make further decision on the US oil. So scaling down to the 1 hour time frame at this point. So this is what we have here on the 1 hour time frame, and looking at what has been happening here in the last 24 hours here, we have a situation where first of all, we have a structure here in the form of a bearish trend line, which has been holding selling pressure in the last 2 weeks. And if you look at what we have here after connecting the series of lower highs here, we had this resultant bearish trend line figured out, and we saw the last time price tested this, it was a huge snap which took price right back into the $75 level. So there is a tendency that we might be having a situation where price might respect that bearish trend line one more time in such a way that we have something like this, followed by selling pressure to send price going further to the downside. This is one scenario we also want to take into consideration as we head into the New York session today. Then another situation here is this. If we look at what happened here since Wednesday last week, I was able to identify another temporary trend line here after connecting the series of lower highs. So we saw the first touch here, we saw the second touch, we saw the third one, and then during the course of yesterday's trading session we saw another rejection of that level, though we had a little break out of that structure. But what this simply tells us is that we have this indecision right here, as price was caught within a consolidation phase even after breaking out of that temporary trend line. So there is an indecision in this market right now, and what we want to be doing here is to understand what this indecision phase is going to be insinuating in the nearest future. So when we zoom into that consolidation phase right now, let's see what is really happening around there. Remember, we already have a breakout of this trend line. So is this going to turn out to be a true breakout, or is it going to turn out to be a false breakout? So if it's going to be a true breakout, we want to be seeing something like this: breakout, price comes back to do a retest of the trend line, that is from a technical standpoint, which also lines up with the support level of the channel that we were able to identify since the beginning of the week, followed by buying pressure on our lower time frame. There we could actually join the rally to somewhere around here, or probably the $85 level, where we want to be seeing how price is going to be relating to this trend line. If we are going to be seeing selling pressure on there, then we want to be seeing this as an opportunity to take advantage of another wave of a bearish momentum to the downside. However, if price breaks above, does a retest of structure, then we might be looking forward to an opportunity to add more position to our existing trade. So that is one scenario we want to be looking at this point. Then looking at the consolidation phase we have identified here, is it going to evolve into a situation where it will retest the structure before that move to the upside happens, or is it going to be a situation where price will just start forming selling pressure right below the $80 area to send price crashing back further to the downside at this point? So in order to do this, we want to scale down to a much lower time frame so that we can see what is really happening around here in order to make an informed decision for today. So with that being said, we'll scale down to the 15 minutes time frame, and let's see what is really going on the 15 minutes time frame. So right on the 15 minutes time frame here, the first thing we observe here is that first of all, during the early hours of today, we witnessed a breakout of the $80 level, which is a sign that we might be having a bullish momentum. And that is why I always say that whenever we have a breakout of a structure like this, it's very important that we take into consideration the possibility that it could turn out to be a false one. And in order to mitigate against such unnecessary execution, we want to be seeing a retest of structure to give us a further confirmation that we want to be joining the rally to the upside. So we had a retest of structure here. I actually joined at this point and I shared this on my public platform, and it appears price is right back at our entry zone right around the $80 level. So what I want to be seeing here is this: I might be taken out of this position, we never can tell. Price might likely come back to do a retest of this structure before that move to the upside happen, or we could be seeing a situation where price might actually continue to the upside from this area. So for those who are not still in this trade, I will be suggesting that we enter this trade. We are profitable for this week, so even if we lose out on this opportunity, we're still going to be in profit at this point. So let's take the risk of joining this rally, as we have seen a breakout of the $80 level here. Price has come back to do a retest of structure, though price appear to have come below that structure at this point. But if we get stopped out, it's still okay. And if price continues to the downside and in such a way that we have the situation price comes back, then I will be waiting for price to come back into the $79 level here, which we identify here. And it also shares a confluence with this trend line that I was able to identify around this area. So if we have a situation where price comes into this level, or probably come into this bearish trend line, then we might be looking out for buying pressure or a reversal pattern on our lower time frame to join the rally to the upside. But if that does not happen and price continue to trade right below the $80 level, then we want to be comfortable in our buy position on the US oil. So that is one scenario I want to be looking at on the US oil for today. So for selling opportunities here, well, if price continues to the downside in such a way that we finally see a breakdown of the $79 level, like I said, price coming back into the structure, breaking down that $79 level, where we want to be patient before joining any decline at this point. as we want to see price reject this level, followed by selling pressure on our lower time frame that might likely send price crashing to the downside. And if that happens, we want to be joining that decline into the take profit target which we identified yesterday. And so there's something that is looking a little bit complicated around here, that is somewhere around here, but it's very, very simple to understand, and this is it. Now what we are looking forward to here is to see if to buy, price might come back here, buying pressure, climb above the $79 level, then we want to buy. But if price drops below this structure, and instead of climbing above the $79 level instead, then we start seeing, though if it climbs above, then we, instead of waiting for price to do buying pressure around the air to join to the upside, instead of that, price continue to find selling pressure right below the structure, then I want to be seeing this as a sell signal to join that decline to the downside. But if price climbs above the $79 level, multiple buying pressure around this area, then we want to be seeing that as an opportunity to buy the US oil. So this is the scenario I will be looking forward to at this point. So like I told you, I'm already in a trade right now with about 70 pips stop loss. So let's see how this plays out in the next 24 hours, and we shall be coming here tomorrow to do a review of what this is going to be giving us. So far for this one, what I've just talked about, feel free to drop in your inquiries in the comment section of this video. So let's deliberate this together. So I'll be taking the next 10 to 15 seconds to read through the charts and see if there are any questions before we move on to the next pair.